and welcome. You're watching BTS, that's behind the scenes on Business Today TV. This is a show where we share a sneak peek into the latest issue of the Business Today magazine with all of you viewers. The key issue or the current issue is going to be talking about a whole host of issues with a cover story on Byju's, which is facing a lot of troubles at this point in time, including valuation markdowns, governance issues, court battles, and of course the layoffs, and a whole lot to talk about. And joining me on this edition are two of my colleagues. Joining me is Binu Paul, Senior Assistant Editor of Business Today magazine. He's been a part of the cover story. He's fronted the story, and he will be telling us everything about that you need to know about Byju's and the entire edtech sector. Also joining in is Ashish Rukhaiyar, Senior Associate Editor of Business Today magazine, and we're going to be discussing the more happening place right now in the markets and economy, and that's the stock markets that are inching towards all-time high levels yet again. So we're going to be discussing very, very fascinating insights right there. Welcome to both of you, and also first to showcase to all our viewers what this new issue really looks like. So there you have it. You have Byju Ravindran, the CEO of Byju's, in a free fall. And of course, this is what we're going to be discussing with. So let me kickstart the discussion with you. Binu, first of all, help us understand the big question right now for Byju's is, can this edtech firm really survive? Of course, the problems are well documented. Tell us the immediate challenges to address on a priority to really survive for the firm.
Yeah, hi, Sakshi. As you rightly said, those problems at Byju's has been very well documented, and they're in the news for all the wrong reasons for a long time now. So the immediate priority for the company is to get an urgent infusion of a fresh round of capital. From what we understand, talking to experts and financial analysts, that the company would need at least around 1.5 to 2 billion to kind of repay its term loan lenders, and also there's a loan that is with a US lending company called Davidson and Company, and also it needs to find money to find the cash flow requirements of the companies, because most of the verticals of the company is in red except for Akash. So the immediate priority for the company is to raise a new round of funding, and if that round doesn't come by, it will also have to look at probably divesting some of its existing assets. And Agash being the only profitable venture in the group, the
Yes.
company needs to see how it can raise money from some of its promising ventures inside. So
Absolutely right, Binu. Like you pointed out, at the core of all their problem is a new fund infusion, which the company desperately needs at this point in time. Tell us, where can Byju's really find this critical capital from?
yeah, see, there are options. It's not like the story is all done and dusted for Byju's. It's not all lost for the company. There's still value in Byju's. The first option for the company to raise money is to find an external investor, for which Byju has to accept that the $22 billion that it raised its last couple of rounds was in the euphoric times, and it may not get what it used to command in the previous round. So the new investment, if and when that happens, will come at a very fraction of its previous round, and that recapitalization also will see its existing investors taking a very significant haircut. But the priority is to get the money capital into the company. But like I said earlier, if it fails to find an external investor, there are assets internally inside the group, Agash being one, great learning, and the core Byju's offering itself. So any existing investors will come at a fraction of valuation, but it will also see its existing investors valuation being wiped out. So these asset sales, the new investors coming on board at a fraction of valuation, like we mentioned, are the funding options right now Byju's has it in front of him.
Absolutely right. One more question comes to my mind is that even if Byju's manages to get this critical capital, that helps it survive at least in the meantime and get it up and running. But the big question is that what even after survival? We've seen it as the poster boy of startups. We've seen it at its peak, and we've seen that the way it has had that free fall now. If the biggest of the edtech player sees such kind of problems, just manages to survive, what about the other rest of the industry players right now? What does the future really entail for them?
See, you're right. So it also is a whole overarching question on the industry as such. But the fundamental question is here on the governance issues that the industry as such has failed, and Byju's has been facing a lot of issues around this corporate governance standards. So that is one of the elements that industry observers often say that the industry, as the ecosystem, has to address at the earliest. If you look at Byju's, they were accused of mis-selling, aggressive sales and marketing, and a very bad work culture. And in fact, Byju's didn't have a CFO until April this year. So during the 2021 period, they spent around $3 billion on acquisitions. They went ahead and did some of the very very high value marketing deals, including sponsoring the Indian cricket team. All this without a CFO. The question arises: who kind of advised them to do all such big deals, or make acquisition in India and abroad, and even raise funds? They've raised around, again, close to 3 billion they raised during this time. So these are issues, corporate governance issues, that the company needs to look at. Even if you look at it, the board of Byju's is now just the three family members: Byju Ravindran, his wife, and his brother. So that doesn't give a very good picture of the governance standards the company has. So this is reflective of the overall sentiments of the investments community, that the ecosystem as such is a maturing ecosystem, and it needs to address the governance standards, the lapses in governance across the system. So this is one learning lesson that the industry is eagerly looking at, probably getting some lessons and making amendments on it.
Fair enough. So all eyes are on, first of all, whether Byju's manages to get that critical, fund infusion to help it get back on track, at least have, survive in these times of crisis. And then, of course, a whole lot of learnings for the other edtech players that Binu has just mentioned. Let me now talk about the more vibrant space, and that is, the Indian stock markets with Ashish. Ashish, you and I both have been speaking to stock market experts on an everyday basis. There was a period of consolidation in the last 1 month or so. But in this last week, we've had a strong return, a very, very solid momentum build up in the markets. The Nifty is just 1% away from its all-time high levels. And, we talk about the broader markets, mid caps, small caps, the Nifty 500, after a fairly long time, it's at a record high. So, and every pocket, all of these pocket segments of the markets are firing on all cylinders at this point in time. The question then is that even despite this kind of a run up in the markets, as an overhang, the global setup is not very supportive. Do you think those are the primary concerns that the market participants believe could, pay some kind of a headwind to the kind of market rallies that we are seeing, or are there other some set of concerns that market participants are raising at this point?
So, Sakshi, first and foremost, thanks for having me on the show. I mean, doing a story where on the market outlook and speaking to a host of market participants is always a very interesting story to do. And for this story as well, we reached out to many market participants, leading Indian and foreign broking firms, mutual funds, PMS players, and even some of the marquee individual traders and investors. And what we gathered from them is that there is a combination of domestic and global set of headwinds which may impact the markets going ahead. So, I mean, we can look at these headwinds one by one. Maybe we can start with what everybody is talking about, inflation. Now, we all know that India's inflation rate has been on a steady rise in the recent past. In fact, July saw the CPI index jump to a 15-month high of 7.44%. Now, a section of market participants believe that It will cool down a bit in August, but it will still be surely out of RBI's comfort zone. So that's a big headwind that people are talking about. Then comes the political surprises. Going ahead, we'll see the states of Madhya Pradesh, Chhattisgarh, Rajasthan, Mizoram, and Telangana, and these are all important states that will go to the poll. And let's not forget we have the general elections also coming up around next year. So any kind of surprises in terms of political outcome will obviously lead to a knee jerk reaction in the markets. Then we have the feared El Nino pattern. We already saw reports saying that in August we saw a 35% rainfall deficit. So any negative news flow in terms of monsoon is again going to impact negatively the markets. On the global front, we have any kind of global correction in the equity markets and recession. If you remember, on and off we keep hearing about seeing reports about US and some parts of Europe facing concerns related to recession. Now, if any of those reports come true, then obviously all the other markets, emerging economies, including India, will have an impact of that. Higher oil prices again is another concern. I think it's hovering around $90 a barrel right now. For most part of this year, it has been around 70 or 80. So there is a slow and steady climb in the oil prices, and we all know what kind of impact higher oil prices can have on India's fiscal and current account deficit. And then let's not forget the global central banks, US Fed. It's the most highly followed global central bank, and they have. If you look at the minutes of the July policy meet, they clearly said that most market participants continue to see significant upside risks to inflation, which could require further tightening of monetary policy. Now, any kind of rate hike is not looked positively by the stock market. So, if say Fed increases rate, increases the interest rates, that again would be a negative for the market. So if you see, I mean, it's a combination of domestic and global headwinds related to inflation, oil prices, political surprises, global equity markets correction or recession. So it's basically a combination of these factors that market participants are currently talking about. Even though they are quite bullish on the medium to long term outlook, but they say that in the near term these are some of the risks that could affect the market rally.
Absolutely. One doesn't have to forget the word of caution here from all the market participants, if even if one is enjoying the current momentum and the current ride. But Ashish, like we always hear, that stock markets are for the optimists. And every time we believe and we hear that market participants say that it's all getting frothy, it's all getting valuations are running ahead of fundamentals. You do see markets running on some other or the other positive sentiment right now. I'm in Delhi right now, and I can tell you the kind of G20 fever that's gripping on everyone, and perhaps that's also reflecting in the stock market sentiments. You look at the kind of sectoral moves that we are seeing in a whole host of related sectors. We are seeing talk about energy transitions. You can see the kind of moves that we have seen even on today's trading session on the power space stocks as well. Look at the kind of consumer durable names have seen, the hospitality names, hotels, QSR names, all of them are flying away in the market. So you can just see that this is just the beginning. We'll have the World Cup later and the festive season again. So all of these are going to perhaps give some or the other tailwind as well. So tell me, what have you got from your interactions with the market participants? What positives are they really banking on for the markets? And do they believe that the markets have in them to rise even further from here, these levels? Because technical experts believe, yes, 20,000 can come anytime. But what after that?
Well, Indian markets are going up, so obviously there are a lot of support factors and there are a lot of tailwinds as well. First and foremost, a lot of people talk about the overall resilience of the Indian markets. And they also talk about since, see, many of these risks, headwinds and tailwinds are also, if you see, interconnected. Now, when we say it's a year in which there are a lot of elections scheduled, that also leads to the government higher spending on infrastructure. So a lot of people are bullish on the high infrastructure spends of the government. They say initiatives like PLI and Make in India can help boost manufacturing. Based on that, on the back of it, they feel that better than expected economic recovery would happen. Companies would have strong balance sheets. Large section believe that the Indian monetary policy is also moving towards the final leg of rate hikes. So there are, and they say that recession is no longer a risk in India. If you remember, a few months back, a section used to talk about that are we also facing such recessionary concerns, but that's more or less gone now. Then you have the strong liquidity support. Now, both foreign investors and domestic institutional investors have been pumping in huge amount of money in the Indian stock markets. FPI's foreign investors have put in more than $16 billion, though there has been a bit of slowdown in the last couple of months, but expectations are that FPI flows will largely remain steady. Even domestic institutional investors, that include your mutual funds, insurance companies, banks, they have pumped in more than $11 billion. So it's not every day that you see that FPIs and DIS both are pumping in equal amount of money. So that is a big positive for the markets now. And you also touched upon some of the sectors. Now it's interesting to note that a lot of market experts are bullish on sectors that are based on themes like domestic consumptions or discretionary spend. So you have experts sorry, you have experts talking about sectors like financials, automobiles, and then capex related like industrials, capital goods, infrastructure, real estate, FMCG, consumer durables. So these are some of the sectors that they are very bullish on, because they feel that these are the sectors that will capitalize on higher infra spending by the government and more discretionary spends by the consumers. On the other hand, they say that they most of the market guys are very cautious on sectors like IT or IT services, metals, utilities, and commodities. But more importantly, they say that the bearish outlook on the sectors is also kind of transitionary in nature due to a combination of these global and domestic headwinds, and a reversal of these certain macroeconomic indicators will again make some of these sectors the flavor of the season. So all in all, they do sound cautious, but the undertone is still very bullish in terms of the near term outlook on the Indian markets.
Okay, so the near to medium and long term outlook remains bullish on the Indian markets, even as cautionary words and, of course, this stance comes from the market participants looking at the headwinds that they exist at this point in time. But the markets are surprising a lot of participants right there. So, in case you are a stock market investor, in case you are somebody who wants to read and find out more about what's really happening in the startup world in India, do go ahead and grab your copies. They're already out on the stands. I've got mine. Don't waste that by any time and go and get these insightful copies. Many, many thanks, Ashish and Binu, for being with us on this edition and sharing such wonderful insights. I'm sure our viewers will have a gala time reading the copies that you shared here on the Business Today edition as well. Many thanks for being with us. But to all our viewers, do stay tuned on to Business Today TV for a whole lot more action coming up right up on your screens.